Welcome to the Snack Bowl, where we talk about what's eating at you. I'm Trista, and I'm here with my co-host Tanya. Here we talk about different financial topics to help educate our members and our community.
In our last episode, we left off where we were talking about our mortgage programs at Mountain Credit Union. So we thought that it would be good to bring in our Waynesville mortgage loan officer, Josh, and he's going to help share with us how to qualify for a mortgage in this crazy mortgage market. Josh, how did you get started at Mountain Credit Union?
So I started a few years ago as an intern when I was at Western Carolina. I did some odd jobs and a little bit of accounting with the admin group. I went back to school, and then following year I came back and worked some IT as the Waynesville group moved into the new building.
That was a big project, moving into the new building.
So I was the computer guy for them, and then when mortgages started picking up, there was a job opening, and I transferred more into the field of study I was in, into the finances, and I started as a processor, and now am originating mortgage loans.
So how long were you in the processing role?
Probably for about 6 months or so, 6 months to a year. And then we had the opportunity to move into an officer role to start earlier in the process and then handing it off to our processor. So I've learned about every aspect of the mortgage world so far and all the different angles.
Okay. I know that since we started the mortgage program, we've implemented an escrow, which is an account that will help put money each month into it's almost like a savings account, but it sets aside the money for the taxes and insurance. And Trista, she actually plays a huge role in making sure taxes and insurance get paid.
Yes, I get those checks out the door.
That's all right. But Josh, we've all had a hand in getting that up and running. Josh, I guess tell us, what's the first thing that we need to do if we're thinking about buying a house and what we might need to do to apply?
Well, before you go in and get that application, you kind of need to know where you are at credit score wise. That kind of gives you an advantage of what you may qualify for. It gets you a head start when you start those conversations. If you're in the high 600s and 700, low 700s, you qualify just for about everything, but there are programs for lower 600s. So knowing your credit score, we always look at 2 years of your employment history, hoping for full time in the same line of work, looking at your income over the last 2 years and taking an average. Then we look at the current debts you have and then see what we can add as a potential mortgage expense to see what we could qualify you for.
Okay.
So 2 years taxes, bank statements and pay stubs and your credit score are the main things when applying.
Okay. So I do know that we have financial counselors. They're certified in each of our offices. And, I guess if somebody doesn't know what their credit score is, you could come down and into one of the offices and sit down with someone and we could kind of go over credit with you. Have you ever had to refer someone back to one of the branches, one of their local branches, to sit down and talk about credit before they could actually qualify?
Yeah, so while, we may not be successful with a mortgage application, very commonly I refer people to the credit building, credit cards. I'll send them back to their local branch to discuss, ways to build their credit, getting a low limit credit card, paying on that, and then they'll come back to me 6 months to a year later with that history and their higher credit score to then apply for a mortgage in a better standing.
Okay. Yeah, because I guess you do have to be able to, you have to have some sort of credit on record that you've made payments on something to qualify. Is that right?
Yep, so paying in cash always helps you out in the time, but it does nothing for building your credit and then helping you with financing. So a lot of times it's convincing people, a little bit of credit goes a long ways in helping you finance your mortgages and possible cars and other sorts of financing you'd look for in the future.
So when people are thinking about buying a house, I think one of the biggest things they wonder is, do I have to have a down payment, or can I buy a house without having any money into it?
Well, you don't need a down payment, kind of like credit score, the higher score, the better. If you have a down payment, it increases your options, but there are mortgages that does not require a down payment. There's some USDA options, but if your credit score is high enough, there are some adjustable rate mortgages that does not require the down payment and doesn't tack on the PMI onto your monthly payment. So you don't need one, but one always does help out if you have one.
So what's PMI?
PMI is private mortgage insurance that a lot of banks tack on to your mortgage payment if you don't have 20% down. And 20% down of even $200,000 is quite a bit. So a lot of people don't have that 20% down and are stuck paying that PMI on their payment. So if you can afford them or get approved for a mortgage that doesn't tack it on there, it increases your approval amount because more goes towards your payment instead of that insurance.
If somebody, if they're trying to determine how much house they can actually afford, what kind of things do they need to know, or do they make an appointment with you or someone to sit down and kind of talk about that, how much they can actually afford?
Well, we're always happy to go over these situations with the members, but what we look at is, in a lot of the cases with W-2 employees, we look at your gross income every month and then your current debt expenses, like the minimum payments you have to make every month, and then see how much of a mortgage payment we could add on to that with keeping your debt to income ratios in line. So it's basically a comparison of your gross income to your current debts and then seeing how much of a mortgage payment we could add on there without overloading your debt to income ratios.
You actually worked through a really historic time period where interest rates were at an all-time low, and now the rates are so much higher. I actually had seen on GMA this morning, they gave a very good example of how much home you can buy is impacted by the interest rate. And in their example this morning, they talked about like a $1,600 mortgage payment and being able to afford a $400,000 house. And this was, probably a year and a half ago, when interest rates were in the threes. And then versus today, if you wanted to try to keep your mortgage payment about $1,600, with the interest rates that we are now, you're only going to be able to buy a house that's about $248,000. So have you had to have those conversations with any of our members about having to buy less house now because of the interest rates?
I've unfortunately had to deliver the bad news of when I talked to people a year ago, had them approved for an amount they were pleased with. Things didn't work out and they came back 3 to 6 months later, and I had to tell them their approval amounts went down significantly compared to before. But, interest rates will always change and you can always refinance to get you a better one down the road, but they are something we deal with daily, with getting you qualified for what you can afford at that day.
I'm sure that's heartbreaking for people.
Yeah, but I like keeping it simple. I always tell them, it's always a comparison of your income to your debt. So if you didn't have anybody else you could add to increase your income, you can always try to lower existing debt by either waiting and paying off a vehicle or refinancing the current financing to get you a lower payment. That way that extra money can be added to your mortgage payment. It can get to a higher approval amount that could help you meet in the middle.
So are you actually doing any loans right now? I mean, are you able to help anybody? Are people buying houses?
We're always talking to people. We got a few in the pipeline, so we do a few each month now. In this time, we was doing about 10 every month. Now it's down to a few, but we're always talking and always preparing for the future. So there's usually a steady stream of at least conversation and applications every month.
And I guess the conversation and the education around it is really beneficial because, interest rates are not going to be super high forever. I would suggest you taking this time to try to prepare yourself and save a little bit of money. If you're paying rent, I would suggest paying a little extra and telling yourself that you're making that extra mortgage payment, and that way you can start saving that money and possibly use that for a down payment. Because there are also closing costs, right? I mean, is it just the down payment when you think about buying a house?
Well, the cost of financing, it all depends on the program and the loan amount. From lower loan amounts, closing costs can range anywhere from $5,000 to $9,000.
Oh my God, when people hear $5,000, what do they think?
Well, they think that's just for us, but that's for the whole shebang. That's our fees, the attorney fees, a year's worth of insurance, and some taxes and other miscellaneous fees like that. So that all don't go to us. That covers the whole thing of financing a mortgage.
And I do think that a lot of people think that's all. When they say fees, it's what goes to the lender. But like you say, there's attorney fees involved. There's insurance that has to be paid. There's appraisals that have to be done. Do you think that there's anything else that we might want to talk about to help people prepare for buying a house that we haven't touched on already?
I think just kind of knowing how it works. I do this every day, so I know the language and what to look for. I just try my best to explain why we do things and what's the purpose behind them. That way, when they do their own research, they can go, ahead of the game and, look out for their best interest and know what they're doing rather than going in blind and trusting what everybody else tells them. So I try to educate them and let them kind of know why things work the way they do.
Yeah, it's such a crazy market right now. But I do think that if people can focus on their credit and learning a little bit about credit, then we could help them prepare if they want to look at buying in the future.
Yeah, so the tips for getting a mortgage, also applies to everything else. So if things don't work out with the mortgage, if you do what the financial counselors tell you and succeed, then you'll be better off in every other aspect of financing or just, savings. And, you'll be better in the future, even if you don't get the mortgage. So if you want to talk about your situation or look over your finances, I'm available for anything mortgage related, but we do have people in each of our 7 branches that are qualified to talk mortgage, credit cards, or just financial counseling. So you can stop by or call one of your local branches and they'll set you up an appointment to help look over everything. It's more common than you think, so you're not
alone.
You're not the one person.
This episode is sponsored by Mountain Credit Union, offering financial counseling, mortgages, auto loans, personal loans, and credit cards. MCU has all the products you need to secure your financial future. With offices located in most western North Carolina counties, staff are available to guide you through any financing situations you will be presented. Stop by and talk to our friendly staff to see how we can benefit you.
Moving right along, Josh is still with us and we are going to play the Heads Up Challenge. This will be our first ever attempt, so you might have to bear with us for a few minutes.
Bear with us.
He is going to give us hints and we have 1 minute to guess as many words as we can.
If you hear this sound, Trista was correct. But if you hear this sound, Tanya was correct.
The loser will have to live with the agony of defeat for the week and wear the crown of shame during the next episode. Play along with us and see if you can beat the ladies of Mountain Credit Union.
Okay, you have a minute. Whoever guesses the most words wins the round.
Okay.
The topic is miscellaneous.
Miscellaneous.
If you paint things, you are a...
Artist.
If you're in trouble with your wife, you'll get sent to the...
Doghouse.
Pickles are in this and you open it.
Brian.
I'm not sad, but I'm...
Happy. We need to
if you laugh, it is...
An emotion.
Funny.
The Jamaicans in the Winter Olympics was famous for joining this event. You ride a tube down the ice.
Bobsled.
Bobsled.
Bobsled. Dog sled.
Not a marker, but it has graphite.
Pencil.
All right, you read a
Book.
time. The final score is 4-4.
Oh.
Tiebreaker.
All right, tiebreaker. You got 15 seconds to make up for it.
Don't mess this up.
These are the best hints you'll ever get. All right, you'll light a blank in a cave.
Candle.
No,
Match.
it's a
Fire.
big stick and it's got fire on the end of it. It's called a...
Torch.
Ooh, that's correct. All right, when you're in the car and you're mad, you... Oh,
Scream.
Road rage.
no, it's you hit the steering wheel.
Blow the
Blow
horn.
the horn.
Also known as...
Blowing the horn?
No, it's a one word. One word. You'll blank the horn.
Blow.
No. Come on.
Goose.
You also, if you squeeze your nose, you'll say the word.
Blow.
No, you're trying to make someone laugh, and you'll squeeze your nose. and
Honk!
you'll say, yeah. I don't think that was within the 15 seconds. Who got the first word?
Me.
I think we give Trista the win on this one.
I thought I was spot on with the goose head.
Lord.
So this week, Tanya will get the hat of shame.
I will wear the hat of shame.
We hope you wear it with pride.
I
as
will
you know
wear it
you
with
are
pride.
this week's loser.
I will be the loser next week.
Next week will be the week of revenge.
Week of revenge, Trista. Make a note.
Bringing my A game.
All right. Hope y'all did well. We'll try it again next week.
Next time on the Snack Bowl, listen along as we discuss brand new products that are in the works to get you higher interest with less commitment. If you've got something that's eating at you that you want to discuss around the Snack Bowl, please let us know. You can stay up to date with anything Mountain Credit Union related on Facebook and Instagram. Feel free to send us questions or comments on these platforms, and it could be featured on our next podcast. We couldn't produce this without the help of Josh, our content manager, Asher, our social media manager, and Nick, our executive producer. This concludes today's episode. Thanks
Thanks for snacking with us.
Okay.
How did you not get the horn?
Blow the horn.
You honk the horn.
Oh, you honk. Honk the horn.
You squeeze your nose.
You blow your nose.
Oh, that was funny.